Hi everyone, I'm back
Hello.
again. Having too much of, I think, wave time. Very excited to host three amazing industry leaders on this exec panel. We have Carlo Savino joining from Lenovo. Carlo, do you want to see a quick hi?
Hello. Good afternoon, good evening, good morning.
We have Bessin joining from CircaLighting, and we have Parag Shah joining from Wakefern.
Hello, everybody.
So just sort of make it a little more intimate and friendly and fun, why don't we start with maybe if each one of you can share one of the fun fact about you.
I'll go ahead if you'd like. Years ago, my father asked me, probably 25 years ago, when I'd worked in a number of different industries, and I'd work in an industry for 4 or 5 years, and then I'd move to another industry. So I was in the personal computer industry in the old days, in the early days, Apple II's, first IBM PC, Lisa, Macintosh, then off into the golf industry. Then I worked in the motorcycle industry. Then I worked in home decor. And my father asked me, he says, I don't get it. I don't understand the connection between all the industries. And I said, well, actually, when I think about it, they're very similar in that the purchasing decision in every one of those industries is primarily made emotionally. That it's not a logical, you're not buying anything because you have to have it. You're buying it because you want it or you desire it. So anyway, I thought that was interesting, even though they're very diverse.
Yeah.
I'm happy to go. In fact, I will confess, I actually had to ask my wife to help me figure out a fun fact about myself. And she told me that what I should tell everybody is that a couple of years ago, and it's unfortunate I don't do it anymore, but a couple of years ago, I used to dedicate every single weekend to bottle feeding neonatal kittens. And that was something that we were very passionate about animal rights, and that was a very fulfilling thing to do, and that's a fun fact about me. Certainly not business related like Al, so I apologize for that.
This is great.
Carlo, that makes it the two of us. I also consulted my better half as to what I can share. And, I'm in the space of pet. Actually, we both, me and my wife, grew up without a pet. However, finally, we caved into our 2 kids. And this year, with the rise of pet adoption, we also became a puppy parent, like about a month ago. So we are adopting. So our household of 4 went to 5. And then it's exciting.
Good. Congratulations.
Thank you.
Congratulations and thank you, Parag. Thank you very much. So let us dive right in. I think the first question that I have for the three of you, and any preferences. So, I mean, the last few months, 5 months have been quite uneven and unique. I'm pretty sure that all of your businesses really have been sort of seeing some unique trends, unique insights, anything that you can sort of share with our audience here. Carlo, you want to go first?
Yeah, sure. So I have the pleasure of managing an entirely online business that mostly services B2B and B2C customers. And we sell PCs and a number of other electronics, and we sell ancillary products around the PC box, like furniture. That's a brand new category of product that we recently onboarded. And I would say that we had been preparing for a shift in e-commerce over the last 3 or 4 years, and certainly 3 years, 4 years in the future. But I don't think any of us were quite expecting the explosive growth in work from home demands, in learn from home demands. And I think what we were really challenged with was not only can we talk reasonably to those customers and compel them to buy our products, but more importantly, how do we make sure that we are building an inventory and supply plan that actually is able to meet the demand of these brand new customers, reaching out to suppliers, working with our internal geo and worldwide teams to see what we can do about just getting inventory based on what customers were buying, and the browsing and purchasing patterns that they were displaying. So I would say, and there's a lot that goes behind it, Udayan. We're fairly sophisticated when it comes to our understanding of our customers and our audiences. But I think it's also a recognition that we needed to pay attention every single day to what was happening with the people that were coming in, who was buying, who more importantly wasn't buying, like SMBs came out, had a very high growth and very high spike in demand, and tapered off pretty meaningfully over a very short amount of time. So we had to go pivot in many ways to changing our supply picture from commercial class products to consumer products, changing who we marketed to, changing the terms we use to go market to them, changing our segmentation and audience focus. So it has been quite a wild ride, and I see no signs of it stopping. And I know we'll talk about holiday later on, where I think we have very optimistic point of view on how this trend will continue for certainly for the PC business on .com.
Yeah, we saw something very similar. Our business historically was a little less than 2/3 to the trade and about 1/3 to consumers. And as we transitioned into this time, one of the things we saw, our trade business remained surprisingly steady, which was interesting, but our consumer business started going through the roof, particularly a month or so into it. Mm-hmm. And so, my major observations would be, one, all of a sudden B2C was on fire. And when you factor in that a lot of our products are quite expensive, our average order values, well over $1,000, and we have many lighting products that cost multiple $1,000s, people were buying those online and readily buying them online. So that was one. Second one was with our showrooms. As we shut those down, we do a lot of B2B business, so our people can make appointments and go outside and that sort of thing. Of course, still meeting would be very, very difficult during COVID, but the rate of adoption of virtual meetings using Zoom and other tools that we had went much more quickly than I would have expected. And it has become much more easy and normal for us to meet with both our business clients and to some degree consumer clients face-to-face over video conferencing. And then the last piece of it that we've noticed for our trade business is the sales cycle certainly has gotten longer. So it takes a little bit longer, and some of it is slowdown in projects, but I think some of it is also it's just a little bit more difficult to transact business this way. So it takes more meetings, it takes more impressions and that sort of thing to get it done.
Parag?
No, that was some great insights. And, I am from the food industry, and the food industry was on probably the opposite spectrum of being an essential product during this time. And, we went through different phases. First, from an operational phase, unlike, work from home that impacted a lot of people, we had to bring in additional people in our warehouse and in stores, and even online to support the increased demand that happened, because we went through 4 distinct phases from a consumer behavior perspective. The first was the reaction when we started hearing about infection, where the stock up was happening and people were going to the stores and trying to hoard up. Then we went into a shelter in place when workplace closed down, school shut down, and everybody shifted online. And now I believe we are in a cautious recovery space right now because the vaccine hasn't arrived yet. And, people are waiting and seeing what's going to happen. And that's going to be the new normal, which we're going to call it the 4th phase, so-called in the food retailing perspective. So, from a consumer behavior, that had an impact because on one side, we are talking about your needs increasing from a food consumption, but also you want to make a fewer trips. So 2 important elements that we track in our business is, the basket size and transactions or the footfalls in the store. Our transaction footfalls declined double digits overnight, and they continue to decline because people have shifted their behavior and how they are engaging more online, making fewer trips, but the basket size went up staggeringly high. Average basket is around $200 versus what it used to be around $78 to $80 pre-COVID, which is a significant increase that we saw. So, and additionally, Bob said it in his presentation earlier, at the beginning of the crisis, 52% of the population was visiting a store. At the height of crisis, 28% of the people were only visiting store. That was a huge shift in a very short period of time, which brought in a significant digital adoption. And if you look at the world of retail, the food industry is on the tail end of transitioning to digital. Hard goods and other products have gone and have had significant penetration, but we are in low single digits when it comes to digital online presence. But what we were projecting to happen by 2025 was achieved in less than 2 months. Today, we are talking double-digit engagements, and we have 50% of the national customer base engaged online in some form during the crisis, and 79% of them are saying that they will continue engaged on omnichannel even after the crisis is over. The other part that we saw a new meaning to was food safety. There were a lot of concerns around the product safety when the virus started. There were a lot of rumors about how the virus gets transmitted. So as an industry and as a business, we had to take unbelievable care because of the products that we are selling to our customer. We shut down our food service bars. We had to arm our employees and associates who are touching live food in the store with additional PPE product, and we had to come up with new safety guidelines and rules and regulations because we could not shut down the store being an essential service. So we had infections within our stores because we were open to public, and we had to deal with that to protect food for our customers. Then, which we all know what happened with work from home, shelter in place, that had a significant impact to our supply chains. 50% of food is consumed away from home. Now, all of a sudden, overnight, you tell majority of the national population that you're going to stay home. They got to eat, and they made a run at the supermarket shelf. So it was not like the country had a shortage of food. It was just about getting it from point A to point B when the demand could meet the supply, right? So that was a significant shift that the industry had to work on. And then the health and wellness. People still care about it. They still want to engage with retailers, whether it's online or in store, and make sure that they're buying good product, they're buying what's good for them. They're going into more of do-it-yourself routine with gyms closed and professional services closed. So we saw a significant uptick in volume on those products as well.
So very, very detailed and very sort of a lot of pointers out there. So let us just try to do a bit of maybe a case situation out here. So based on all of these pointers that you have shared, is it possible for us to somehow construct as to how the pandemic shopper looks like? Because that can be really helpful to a lot of people getting into the holiday season as to any specific attribute, like safety was one of the things that I think Bob mentioned, also mentioned this way. Are there any core attributes which you are seeing that the pandemic shopper was most likely to, let us say, have? Any thoughts there?
I think on our side at Circa, what we're seeing is people who are now having to work in a different environment spend many, many more hours in a different environment. So from a home decor perspective, similar to food in the sense that you're spending more time at home, it's impacting their desire and their want to have a more comfortable place to work. And so I think that's driving some of our incremental purchases. That somebody's sitting in a room looking at that same tired lamp they've been looking at for a long period of time. Now they're in there every single day looking at that lamp. There's some motivation to make that purchase. So I think that's part of it. I also think that a lot of people who were reticent to shop online, who basically were either technology laggards or just really wanted to touch and feel things, are coming across the threshold. So we're getting non-savvy online buyers buying online, which means we have to accommodate somebody who isn't as comfortable in that kind of environment. And I suspect, and we'll see in the long run, but I suspect those people will stay online at least part of the time. I can tell you that more than half the additional consumer business we've done so far since the pandemic started came from people who've never done business with us before.
Wow.
So it's very exciting. If we can turn them into repeat buyers, we love it.
I think Al, you bring up a really good point. And we've started to go look at specific audiences that transact and shop on our website. And traditionally, we have been focused on SMBs, which represent a little less than 50% of our total browsing and buying population online. And we saw that that pretty rapidly, as I mentioned before, interest and productivity of that specific audience really declined, and it almost started day one of April 1st. But what we saw was a pretty sizable shift into consumer goods, like you had also mentioned, Al, before. And so and mostly along specific demographics, what we saw was the gaming population absolutely exploded on Lenovo.com. We've seen gaming sales of PC products and accessories and headsets and software titles and those kinds of things growing by 70-80% year on year. I think one of the prevailing hypotheses is that for us was that the stimulus checks were a great way for people to potentially buy things that made them happy during some of these times where they had to stay at home, and with a lot of free time, gaming was something that people felt like they really wanted to go do. So our gaming business has been explosive. But I also wanted to reinforce something that you said. We've traditionally been focused on acquisition of customers that are mostly digital savvy. We call them digital natives at Lenovo. But what was interesting was that what we started to go see is a pretty rapid shift in people who were traditionally uncomfortable shopping and purchasing online, doing so at a much more accelerated pace. And I think what's interesting, and one of the learnings that we have, is that the internet for some of these people, and the internet in general, is a pretty seismic democratization of data, where now you can, rather than going into individual stores and learning about products and getting pricing, you're really able to go from tab to tab to tab, comparing different vendors, different retailers, to go find the product that meets your needs. And it really comes down to how well are you positioned in the market? What does your supply situation look like? And ultimately, how well are you servicing those customers and meeting their needs? And I think it's been a really interesting learning, because we really built a business around how do we best serve a three specific audiences: gamers, students, and SMBs. But I think we've had to start to think more broadly about how do you reach a wider tranche of customers who don't fit into those three audience segments, because they have needs that are met, and they have very different expectations on what type of content they consume, the extent to which they're willing to go buy high purchase items online with a credit card. It's just a completely different mindset.
Great, thank you, Carlo. Parag, any insights?
Yeah, great insights, and I'll build upon what Carlo and Al said. And from a food perspective, I'm going to take people back with their memories about 10 years. When the last economic recession happened in 2008, 2009, and millennials, which was the youngest and the biggest cohort coming into the marketplace, got impacted in a very negative way based on the situations back then, there was a significant shift that happened to experiential-driven economy. People went from buying to renting, went from, staying home to traveling. And that kind of created a huge shift. The whole New York City, or any urban city, restaurant scene just absolutely exploded over a few years. People were traveling all around the world. That became a thing because they chose not to invest or could not afford to invest. So they were using their discretionary monies in experiential experiences, which had a negative effect on the whole food space, because the shift to away from home happened drastically. So if you look at the grocery industry, we have been in the low single-digit growth for the last 10 years. What this crisis does, is it gives a whole new shift away from experiential economy to stay at home. And already Al said it, what he's seeing, new buyers are coming into the lighting business. And new people are coming into industries that they had never seen before. And we are seeing the same way, people are buying People are owning home. The whole residential real estate market is booming, which has a direct correlation to the growth of food industry. So I believe that will be a huge shift that will stay with us for a long, long time. Additionally, if there are any consumer goods people on the call right now on this WebEx, I would share a very interesting insight that I learned over the last few days. From a loyalty perspective, brand marketeers live and die by brand share, market share within their business, and loyalty is a huge thing. But in the food space, because during shelter in place, customers bought only what was available on the shelf because they had to get it. Their loyalties were broken at that point of time, and 48% of new buyers are going to stay with the new brand that they bought. So if you are a brand that lost customers, you got to do something about it. And if you have a brand that you gained customers because your supply chain was intact, you have a great opportunity to keep the new customers. So I believe that creates an opportunity for both. Some have to protect and some have to gain from it.
Fabulous, Parag. So you sort of mentioned about a very important point. So you are essentially saying that, again, I'm really looking at all those competitive strategy models, right? So essentially the supply chain can essentially be a determinant for even probably influencing your brand preferences, right? So that, I think, is a unique concept that you are talking about, right, in this situation.
Yeah,
and
it's interesting. And also, food manufacturers have realized the complexities on having a significant portfolio of products, and Coca-Cola and Mondelez have gone out publicly and said they're going to reduce 25% of their portfolio, which is interesting because they want to keep it simple and make it available to the customers when they want it.
Very interesting. So now we have some of the common themes, right? So shelter in place or cocooning is one of the common themes. How can I sort of make my living space better? That, I think, is one. The second part is we have seen a completely new population, as Carlo mentioned, right? You mentioned about a seismic democratization of data, right? So and it's a different way of accessing usage. The entire experience is different. So from that perspective, we are having a new population sort of come in. Parag, you talk about this theme about away from home now converted to staying at home, and those consumer behaviors essentially changing as well, and which can really impact, again, the distribution really impacting a brand loyalty impact. Right. So with all of this in mind, what should retailers? We have many retailers sort of join us at this point in time. So what would your advice be? So what is your, first of all, forecast for the holiday season? How exactly are you really approaching the holidays? And then we can talk about any key lessons that you may really want to share with the businesses you are.
I'll start. So we actually start our holiday planning back in late February, early March, and I think we've adjusted it and adapted it over the last couple of months, just based on what we're seeing from market trends, certainly customer behaviors, certainly specific product affinity, and a couple of things that we expect, just to net it out. We actually do expect to see a relatively, we're very bullish on our holiday plans right now. And quite frankly, I think you mentioned it in your last presentation. We're actually anticipating that the holiday season is going to start much, much earlier this year, probably very early in October, and will really maintain a high degree of momentum going into the period where people stop buying online and going into stores to get those last minute gifts. So as a consequence, we've had to go do some pretty significant things in pulling ahead our inventory. And like Al said, we are on Lenovo.com a very high-end PC retailer. Our average order value is in the $1,200 range. Versus retail, in many cases, is in the sort of $500 to $600 range. So the build ahead and the financial commitment that our total enterprise organization has to make to allow us to be able to go meet the market demands from a CapEx perspective, from an investment perspective in hardware and putting them into a warehouse is not insignificant. And so we've had to accelerate some of those conversations about making sure that people understand that the holiday period really is going to start in earnest in October. I think the other thing that I would say is, and one of the things that we've talked about a lot with my marketing team, who are a bunch of absolutely fantastic folks, who are looking at things every single day, is a strategy very similar to stock trading, and that is, we see that in many cases leading up into Q2, or rather the June period, June-July period, we saw a lot of the competition really stay out and elect not to go put their money in the market. We took the exact opposite approach. In fact, we worked with our marketing teams. We worked with our own internal executive teams to get more marketing dollars to go put into media, to increase awareness, to drive consideration, and ultimately drive overall more visits to our website. And so, we were very happy. It was part of the earnings announcement that went out yesterday. But we were very happy to not only see overall worldwide e-commerce grow 50% year on year last quarter for Lenovo, but overall traffic came in as much as 65-70% year on year, and that was really a function of just taking a risk position on getting some money out there. So we're going to do the same thing in Q3. I mean, our team is right now working on a plan to put additional media dollars in to see what we can do about having more conversations and improving our impression share. So if I was a betting man and I get to play with a bunch of money and I can do that, that's what I would say. I would say if you have the supply to meet the demand, I would say putting money into market has been absolutely a catalyst, a huge catalyst for our success over the past 5-6 months.
Great. Thanks, Carlo.
Yeah, I think people are starving for communication. I think they're starving for stimulation. So, on our side, we have and will continue to really ramp up everything related to social media, online events, that sort of thing. I mean, for our trade customers, we've been doing continuing education, online seminars, and surprisingly getting hundreds of attendees per session. I mean, just something we never really expected. I think for consumers, just having that, creating a very active dialogue online. I think more than ever, we're getting a chance to get a broad reach that way because we've got a lot of newer adopters in that world, and very frankly, they don't have a lot of choices to do other than that. The other thing that we're really trying to take advantage of, and we're still figuring it out, is once our customer service and inside sales center had to transition to work from home, and they've done a wonderful job of it. I mean, partly because they're great people, and partly because we really had never tried it before, and we managed to figure it out, at least for the time being. That now gives us a lot more flexibility to be available to customers into the evening hours, across time zones, potentially on weekends, because we don't have to worry about staffing an office and keeping a minimum number of people there. We can get a lot more creative with shifts. If somebody wants to start and work in the morning, but then take a couple hours in the middle of the day and work out at home or go for a walk and then go to work later on, we can now accommodate handling and being there for our customer when they need us. We think that's going to be particularly useful for some of these newer online averse buyers that we've got that will help them out. So we'll keep doing that. We'll keep doing virtual meetings. And then, there's some longer term investment, I think, that we'll do online in terms of, better and more clever ways to show design product, high design product that is beautiful online and somehow present it in the light that, historically we thought was only possible by seeing it in person.
No, some great insights. And, from our perspective, the impact was so staggering that people were working 7 days a week, where we had to force certain people to take their PTOs because we didn't want them to get burned out. Just based on the demand and the scale of fulfillment that's being expected out of the industry. So as we started looking forward, even though this is not in our rearview mirror, we kind of took a 5-point approach. First step was to plan. We increased our buying cycle of product. When it comes to edible products in the grocery industry, the cycles are short. but we are forward buying products, making a significant capital investment to hold on to inventory. So when the demand surge happens for fall and holidays, we are able to meet that demand surge. Additionally, from a workforce perspective and a technology perspective, we made significant short-term and long-term CapEx investments. We have gone and hired third-party workers to man our warehouses and store associates so that they can deal with the heightened demand. And also, we are investing money on the technology side so that we can allow for the surge in demand that's happened. But all those things are good if we cannot perform, and we saw it happen during the months of April and May. We had to quickly react to governmental action in terms of what they would allow, in terms of number of people in the store, what they were allowed to sell, and all the impacts that created. Workforce retention became an issue, so we had to deal with it. So we had to execute the plans that we are creating. And Udayan, you said it earlier in your presentation, nothing works if you're not flexible and you're quick to react to a crisis like this. So this is planning and preparing, but also being flexible enough so that we can react if some variables change that we did not consider. So that's been the new norm that we have learned through this crisis. But we are not waiting for the change to come to us. We are aggressively approaching it. So from a marketing perspective, we had an approach on paper coupons to our customers because they are promotionally savvy. They're still looking for the deal. They're still looking for the promotion. And we shifted that in the short term to completely and digital environment. And we will probably end up staying there when the crisis is over. But that was a huge shift. So we are delivering the value, but differently.
Great. Thank you. Thank you, Parag. So the one question, as all the three of you were speaking, let us talk a little bit about the people and the operating infrastructure, right? Because suddenly when you are really looking at a spike, at the end of it, it's basically sort of people who are sort of managing this entire spike. And that I think it sort of goes without saying there is a tremendous amount of emphasis. Now, this holiday season, again, so our projections are $50 to $80 billion. When who knows as to what is the exact number, but it will be pretty high. And I think everyone is prepared for high. So in terms of just the people and the resources component, so in any strategies that, let us say, Carlo, Al, and Parag, you guys are going to adopt, and what is the plan A on the people side, and what is there a plan B as well? Either things sort of go up much beyond as to what you had expected, or things don't really sort of go as per plan.
I'll jump in, then. That's a great question. And first of all, from a food perspective, we don't think there's the surge that we saw in the month of March, based on the slide you showed earlier of a triple-digit increase. We are going to see that again. There's going to be an increase in demand, but not a surge like that. So our challenge is going to be greatly diminished in being able to meet the demand. However, it's all going to be a function of fluidity of supply chain elements within the country. How quickly can the consumer goods companies make the product and deliver it to fulfillment centers if you're in the online business, or the stores if you're in the traditional store business? So that's going to be the key. And everybody within the supply chain is making significant investments at every point. Increase on warehousing capacity, increase in trucking capacity, increase in production line time. So a lot of investments are going there to meet the demand. Also, businesses are making shift from the food service business on the holiday, the entertainment, away from home, because the needs in that industry is significantly different than what happens at home. So there's been a significant investment going on levels to shift the capabilities from that space to the retail at-home space.
Right. Carlo, Al, any thoughts on that?
Go ahead, Al. I'll kind of follow up after you.
I would say with, in our business, holiday has never been a huge time like it is in some industries for us. I mean, November, December for us can be really good months, but they're not the best months during the year for us. I would say this is probably going to be an interesting year because of the increase in consumer business that we're getting. The designer business, if you're going to buy lighting for your home, you're not buying it between Thanksgiving and Christmas. You're buying it before Thanksgiving so that you can get it installed for all that you do. That I think there's going to be less pressure on that, but I think we'll see a lot more pressure on the consumer side. So I think having flexibility in hours, there's some changes we'll be making on our website to make it just easier and quicker to figure out how to shop and place an order, and then broadening our support times just to handle the consumers over a greater hour range. But that's probably the extent of it, I think, on our side.
Yeah, I don't know if my team is watching this, but I take the holidays very seriously, and it's always been a little bit of a running joke that that everybody is here, and it's a very big event that we have in person. I think as we look at Q3 and the reality that this is, expected to be a largely virtual kind of experience for people working on a holiday campaign, I would say there are three really significant things that we're going to have to pay attention to. One is, I would say, rapid acceleration of platform and infrastructure pressure testing to make sure that when we have an increase in demand, and we think about things not in terms of number of visits to the website in a day, but we think about concurrent transactions or number of people visiting on a second-by-second basis, and actually working our way through every single system that we call, every single system that touches what we do, and making sure that there is a point, a threshold in which they can perform reasonably well, and in what the contingency plan is if any one of those number of dimensions fails for whatever reason. What is our failover plan? The second one is, and Al mentioned this, we have a very sizable inbound sales organization that supports our web business. These are people, these folks actually take calls from customers who need help transacting or researching or making a decision about which product to go buy online. And to his point, it has been, we had no idea how complicated it would be to go build a call center infrastructure on a virtual basis, because we never have to do it before. And so as we think about the sheer volume that we've seen in the past and expect this year, it's going to be vitally important that we look at staffing coverage, that we look at people being able to go balance family needs and family commitments with also making sure that we are picking up the phone and talking to customers and helping. I think there's a lot of work that has to be done on that particular angle to better understand how do we meet both of those objectives, because we know that this is a huge retail period for us. But on the flip side, we also know that this is a time that this is a time for family, and people want to spend time with their loved ones and to some degree regroup and recharge. And then the third thing, excuse me, is interestingly enough, it's related to people, but it's also understanding whether there are specific product categories that we frankly don't have coverage on, that we think are going to be really meaningful to customers in holiday, and how do we start to go have conversations with brands and distributors and partners to see what we can do about being able to really flesh out that full PC solutions experience in a way that we haven't been able to go do before. And I bring up furniture once again because you wouldn't expect that a PC manufacturer would see much success in offering furniture. But it was really a confluence of events that when we onboarded a very big PC manufacturer, that we also saw demand really spike for that. And so it was a kind of a right place at the right time. The question is, what are the next 2 or 3 categories where we feel like we should take a risk position on? So I think it's a little bit of people, it's a little bit of understanding the market and your customers. I think what we've tried to do at Lenovo is really instill a culture of wanting to go win big during holiday, and it really is a satisfying feeling when everybody rallies behind hitting that next $1 million or the next $10 million, and everything that we can do to pull out all the stops to make sure that we show really meaningful performance in the business. And it's a culture of winning and a culture of performance that is incredible to see. And there's no better example of how empowering and how exciting that can be than when you're sitting on a call at 3 a.m. on Black Friday with your team, and they're talking about the next, that next big sale. So to me, it's our Super Bowl. My team treats it like that. I love it very much, and I'm absolutely looking forward to what this year will bring for sure.
Well, I think talking about that, Carlo, the last 10 years, I think we have been pretty experienced on the Super Bowl, and it has been fun. So
Yes.
running that operating around the clock. So I just have one question. So I know we have quite a few analysts joining us from financial institutions today as well. So one of the questions that got asked was, how is back to school been so far? And this, I think, question is more for Carlo. That's what came in. I'm just blending in some of the audience questions that sort of start coming in as well.
I think we walked into back to school expecting that we saw an enormous amount of learn from home pull in as part of the early school closings back in March and April. So we had very tempered expectations on back to school. What's interesting is we have seen a pretty explosive growth in certainly learn from home and college laptop and particularly around Chromebooks that we didn't expect to see this year. And unfortunately, in our industry, we have pretty significant supply and product challenges, particularly on Chromebooks that mean we can't always satisfy customers. So this is to the earlier point. This is where agility really becomes an important factor in managing this business day to day. It's when you start to go realize that you're bringing in customers and customers are visiting your site for product categories that you are simply sold out of. How do you redirect the conversation? How do you improve your cross merchandising? How do you start to go shore up your SEO and paid search activities to go drive to products where you actually have supply to go meet demand that's close to or close approximation of what customers are looking for. But in a nutshell, I think we're still very satisfied with our overall performance. I'm certainly satisfied. My boss is not satisfied. He always wants us to be doing more. Udayan, you know him very well. So we're always looking at the next big opportunity, the next big rock. But I would say so far it has been a very good back to school for us.
Thank you, Carlo. Again, for all of the attendees here, we are going to be continuing this series, and Heather is going to be mentioning that. And actually, Carlo's boss, Ajit, would be our speaker on the 10th September. That's the day when we complete 10 years of partnership with Lenovo. So we wanted to sort of celebrate that with that session. So there is one question which came from the audience. I'm just trying to read. My eyesight is getting worse by the day, Carlo. This is for everyone, for anyone on the panel. We continue to see off-price retailers such as TJ Maxx, Ross, and Burlington stick to the tricks of brick and mortar strategy and so on, the off-price discounting and so on, right? So what is your viewpoint? I mean, is that strategy likely to continue to be successful or during this holiday season and beyond, or what any thoughts on that?
I'll make an interesting observation. As Udayan knows, our company is not very promotional historically. We would typically do 2 off-price events a year, one in the middle of the year and one around Black Friday, Cyber Monday, because we sell at a premium price point and we really didn't want to compromise on that price point. As we got into the COVID era, we worked with our suppliers and actually started discounting some of the product. And of course, we saw these huge lifts, and the question in the back of everybody's mind is, how much of the lift is off price? How much of the lift is because our showrooms are closed and everybody's sitting at home, right? So at the beginning of July, when our last sale ended, we agreed not to put another sale on and haven't done one since then. And what's interesting is our growth rate online dropped a bit, but not nearly proportional to having turned off the sales. In other words, we think probably 2/3 to 3/4 of the additional sales that we were making had nothing to do with the fact that we became off price. So at least in our segment, where we've tried to protect the retail price point as much as possible, I don't feel like we've entered into a world where we have to be dependent on off-price sales to drive business.
Yeah, the one thing I'll say is, and I'm not inside the merchant team over at TJ Maxx or at or any of those places, but it seems to me like they probably have a fairly good understanding of who their core audience is. And I'm reminded of a similar retailer that took the ambitious step of reducing their discounts entirely and working towards an everyday low price EDLP model about 7 years ago to frankly disastrous effect, and that's JCPenney. Certainly, kind of recovered since then. But I think I think that to some degree, I wouldn't be surprised if it continues, because I think they have a fairly good understanding about who their customers are and the kinds of things they expect to get from their retail channels. Certainly, that's that's their prerogative, but I think it's all about knowing who your customer is and making sure that you're meeting their needs.
Right, Parag, any? Sorry, you're on mute, I think, Parag. Yeah.
Thank you. If I could just build upon what Carlos said, the trends that we have seen and read about TJ Maxx, even prior to COVID happening, they were gaining at the expense of department stores like JCPenney, and they had figured it out. What I would like to add to that is, remember, we are also, along with the health crisis, we're also dealing with a recession. So as department stores struggle and consumers have fewer outlets to go and engage, TJ Maxx becomes a very good destination to be able to do that. And I believe that will be their formula, and they will be successful with it, because we are seeing that happen in the food retail space, where discount stores, especially two German retailers who came over the last few years called Aldi and Lidl. Aldi has become a significant player. They have over 2,000 stores in the country, but Lidl, with about 100 stores now, has created such a tectonic wave across the whole industry in trying to give a different perception to the consumer of lowering prices, that they have forced Walmart and Amazon to react on it, which has led to an industry-wide reaction. So I believe TJ Maxx is to the hard goods industry what Aldi and Lidl are to the grocery industry.
I think it's a world with two poles, and it's becoming more and more separated. I think at the one extreme, you have the people that are incredibly efficient, selling across categories, pricing themselves appropriately, mass merchandising. And I think at the other opposite end, you have highly specialized, classic specialty retailers that add a lot of value in terms of helping with product selection, doing a good job of curating their assortment, for example, and that sort of thing. And I think what we're seeing, and we were seeing it before the pandemic, is you're seeing that middle ground of kind of de-differentiated, the old department store model of we'll have a little bit of everything, but we don't really add a lot of value in the process, getting torn away between those two extremes, right? And I think this just accelerates the process. I think you're going to see a wide open market for specialists, and I think it's just going to strengthen the position of those people who, on a broad generalist scale, are very, very good at what they do.
Thanks, guys. One more question has come by from the audience. Very interesting question. The question is, how will you focus on your customers this holiday season? And what do you hope to learn from their shopping behavior this season? So what are the implications, and how will you use some of these learnings for next year? Very interesting question. I mean, how will you focus? I think you have spoken about, but how do you really intend to use what you have learned moving forward? That's pretty interesting. Yeah. Any thoughts or comments? I know it's a tricky one, but.
Yeah, Udayan, from a food perspective, we are going very aggressively into this world of unified commerce, where it's going to be in-store as well as digital. But we're also focusing on the third level of merchandising, which is called the last mile. And partners like Instacart are going to have significant impacts onto the retail business, which in my opinion is going to become a technology business over the next 10 years. And, the advent of artificial intelligence and all the tools is going to so-called create a fourth industrial revolution in food retail with personalization, SEO, subscription, visual commerce,
So
driven customer analytics, they're going to influence such a sea-wide change that you have to refine your ability on things that you're doing well, get better at it, and start investing into the future.
Very interesting. Anything to add, Al, Carlo? That
I would say on our side of it, there's so much unknown right now. I think that this upcoming season will really validate for us the way we responded to what we've had from now up to now, which means is our infrastructure, our customer support services, all of the ways that we've reacted in the last few months going to be adequate to sustain that relationship and that engagement with our customer during a period of time when likely there's going to be a lot of competition for attention in terms of buying things. So it'll be an interesting experience. It's a little bit of a new frontier for us, as I said before, because holiday has not been as big a deal for us as it is for a lot of retailers. I suspect it's going to be more important for us this year than it's ever been.
Yeah, and I'll kind of finish up on here, and I will say that we've spent an awful lot of time over the last, I would say, 6 to 12 months, really trying to build out a plan for retention of customers in a pretty meaningful way, and I think this has been to some degree exacerbated by the rapid acquisition and influx of brand new customers, making it even more important that we start to go think through what are our 1, 2, 3, 4 quarter plans on keeping the install base active, keeping them engaged with what we're doing, giving them not only transactional content, but also giving them content that helps them meet specific needs better, or gives them tips and tricks, allows them to be able to have conversations with like-minded people, and it's not quite ready for unveiling yet, but I will tell you that it's the way that we're thinking about it would represent a pretty sizable platform shift in kind of what we're doing, with our intent to really be part of the conversation with our customers in their day-to-day lives. More than just a place where they come transact once every 3 or 4 years when they need a PC product. So I would tell you that great question for whomever asked it. We have given an awful lot of thought about how we maintain that relationship with customers. It starts with loyalty. It starts with having a great experience. But given the life cycles in our business where you could come in and we won't necessarily see you for 3 years, the question is, how do we retain you and keep you active and keep you interested in what we're doing and the value we can provide every single day or every single week? That's the next big frontier for us, and it spans much more than holiday. Quite frankly, it's a multi-year journey, but absolutely critically important for us.
Thank you, Carlo. I'll sort of wrap up this session. This has been fantastic. With just one last question, putting you on the spot, and how would you, if you were to define this upcoming holiday season in one word for your business, how would you define it? The only caveat is you can't use unpredictable or uncertain. So that's the trick question, putting you on the spot. Anyone who wants one word definition for your business of the holiday?
I would say what comes to mind right away is the word people, because I think it's all focused around people. It's focused on our people inside the company having adapted and continuing to adapt. And it's on the consumer out there and how they react and respond to probably the most unusual holiday end of year season that they will have experienced in their lifetimes.
Great, thanks, Al. Carlo, any thoughts?
Well, I was gonna say people, and then Al stole it. So I will say, I was trying to decide. I think honestly, the word that comes to mind is going to be competitive. Quite honestly. And I think competitive in a way that we hadn't necessarily seen before, particularly since we have traditionally focused on a very few number of e-tailers that we consider in our competitive set. But we have that list is rapidly expanding as a lot of traditional retailers are making decisions about indexing much more to web and e-commerce than they ever have before. So it's going to be, I think that when it comes down to trying to go increase impression share, trying to get eyeballs, and trying to break through in marketing, I think it's going to be much more competitive this year than it was last year.
100%. Yeah.
I agree with both Al and Carlo with both the words. I will add to that is acceleration. We need to accelerate our embracing of the new, whether it is technology or skills or capabilities, but we also need to accelerate going away from the old and being able to discontinue some old habits and old ways of doing things and just move to the new normal, because that's where the customer is. And I believe the future is going to be driven by customer who embraces technology, forces businesses to get there.
Fabulous. Thank you, Parag. It has been absolutely a pleasure. Thank you very, very much. It has been a delightful conversation. Thank you so much for your time. Thanks a lot.
Thank you for inviting us and for having us. This has been fantastic.
This is fantastic. Thank you. Thank you.
Thank you, Udayan, and the entire team for a great job.
Yes.
Thank you very much, everyone. Thanks a lot. Thank you.